In yesterday's video, Bitcoin was around this 96,493. In the previous day to that, it was just a little bit below. We've seen that Bitcoin across the weekend has pretty much gone absolutely nowhere. It's just consolidated. I mentioned on Saturday that that was pretty much likely because Bitcoin does tend to drift across the weekend. The two key levels to keep in your mind are still the same from yesterday's video. A bullish case momentum above 98,384 and a bearish case momentum below 94,574. If we get down below 94,574, there is quite a degree of structural support in here. So we wouldn't anticipate it going too much further than 93,432 under normalized price conditions. Our assessment if Bitcoin and crypto will go up or down is largely dependent on our assessment of the cheat sheet. And for the members of the CTKS Method service, I put out a pretty extensive video in the past 24 hours. It takes you through a monthly analysis of all the components in the cheat sheet, either up or down, for this month. And there's some really interesting things that are emerging. Please make sure that you watch row 1 all the way through. Total crypto market cap across the weekend has been doing exactly the same thing as Bitcoin. It's just been wandering, it's been meandering. But the key is, it did show a degree of promise early on, but the sellers up here at the $3.15 trillion mark just were too strong. Also, the buyers down here at this $3.055 trillion level are also too strong. That's what creates consolidation. The buyers and the sellers trying to figure out who's going to overpower each other. It's potentially a little bit easier to see under these kind of conditions. Previously, when we got north of the 3.16 trillion, we sold down. Where did we sell down to? The $3.05 trillion mark. We tried to get back up to the 3.16 and just didn't get there. We're starting to find at least a degree of positive momentum at the current time. Total crypto market cap is 3.1 trillion. The thing that we need to look at, if we get above this 3.16, confirm it as support, that's very bullish. But if we lose the 3.05, confirm it as resistance, that's very bearish. The truth is, total crypto market cap is at a bit of a pivotal stage right now. If it drops too much below the 3.08, it could definitely attract itself down to the 3.05 trillion. Again, we realistically need to look at the row 1s and row 2s. Before we get into that, let's have a look at Bitcoin's directional momentum across the crypto market. That's indicated by this blue line in the background. The percentage change in Bitcoin is down here. What you can see for the past few days, Bitcoin is down 10%. And we can see ADA is on the lower bank at the current time. Floki and BNB, Solana, Pepe, SHIB, and Bonk are upper bank. You did see a big rise in total crypto market cap relative to the rise in Bitcoin. This is explained by people piling into the memes. People love the memes. Before we look into the cheat sheet, especially row 1 and row 2, let's look to the main markets on the past trading session. We saw quite a degree of red. This red would freak people out, and the markets are very fearful at the current time. When we look at sector performance, we can see the worst hit were consumer discretionaries and communication services. The best were energy, but everything was in the red. So therefore, people are looking at the markets and saying, oh boy, what do we do on red? We sure as hell don't buy, we sell. That's at least what retail say. Of course, our community is incredibly different. We know that small percentages make huge percentages over time. And thank you everybody for your comments from yesterday's video. Just awesome. To gain an understanding of retail sentiment, we look at the Fear and Greed Index, which is literally the greed index, not the fear index, because the greed index gets less and less and less as there's more and more fear. Currently, there's a 39 reading on fear. That's not a good for retail, because basically what retail will do is that they'll say, everything's going red, it's all going to hell, it's the GFC, it's 1929, and I'm selling everything. Now this means something very, very specific. If people trade from this perspective or invest from an emotional perspective, they may say that they're investors, but they're actually emotional traders, because whenever the markets go red, they sell. That's emotional trading. And it's a very big reason why people can't succeed in the markets. Even though there was so much red across the main market throughout Saturday and Sunday, it's now Monday, Aussie time, we've seen that the crypto market has done quite well. Fartcoin is ripping down in exactly the wrong direction. And just a couple of days ago, it was going off in a positive direction. The memes are very interesting. Keep your eyes on them. When we look at DeFi, we see, it's not really going anywhere. ENA is quite down. CeFi, where's that going? Just about absolutely nowhere. Blockchain infrastructure, FET, the graph, Quant, Filecoin, not bad. Link. And let's have a look into GameFi. BNX doing quite well. But remember, these are very small projects. You can see how small they are relative to the crypto market. What about blockchain? Ugh, looks pretty red, doesn't it? That's juicy stuff. That's what we look for. Ooh, Catboy, something new. Oh, there's so many memes here and there and everywhere. You'll see a lot of new names in the crypto space. Let's go across to Chain and check out ETH. ETH is going absolutely nowhere. BNB did incredibly well. In the last 24 hours, well, a little bit before that, it just shot up, but it's now starting to retrace. Phantom, good on you, Phantom, getting there. If you're making buying and selling decisions based on a heat map, please don't do that. Make sure that you look at the charts. And look at the charts structurally, just don't look at them. There was a lot of optimism inside the crypto market, but that's been getting killed off. The Crypto Fear and Greed Index is dropping, and it's dropping rather hard. Around these times in the market where fear reaches levels like this, it's generally a good idea, if you're a real investor, not an emotional investor, but a real one, to actually DCA in, because these levels are really juicy and they do coincide near or around local bottoms. So it's something to just bear in mind. Does it mean we can't go lower? If there's widespread panic in the markets, of course we'll go lower. And that's why we need to look at row 1 and row 2. But unless you have these thought processes about going through in a systematic fashion, the market will have you at its mercy. You will unfortunately lose. Making money from the markets means that you will need skill. You'll need to understand what I've been going through at a much deeper level. For example, when we look across the past 24 hours, and this is from a Sunday, which is really quite high, 137.27 million, majority were long liquidations. And if we just go past the 12-hour mark, a lot of longs, 4-hour mark, lot of longs, and the 1-hour mark, just about all of the longs. A lot of people get into the markets and they want to make big dollars really, really quickly, and they end up getting liquidated. This is all about retail trade perfection. If you look at YouTube influencers, they'll say, this always works, this is guaranteed. Yeah, it's not. What's guaranteed is that price is always moving in a wave. It's always going down and then up, down and then up. And it also does the opposite thing. You can make money in any market condition if you can read the market and get synchronized in with it. Even a down market like this, you can absolutely let it rip. In terms of major economic releases, the CPI data is coming out this week, and that's going to move the markets no matter what the readings are. And Chair Powell will be testifying on 2 days. That's going to move the markets as well. Expect choppiness midweek. And don't forget, things will get very choppy if you miss your Valentine's Day with your partner. The next FOMC meeting is on the 19th of March 2025, and we can see currently there's a 92% probability of zero change in the federal funds rate. and an 8% probability of a 25 basis point decrease. If the CPI comes in way hotter, or did I say the CPI? If the CPI comes in hotter, that could trigger actually not a stay the same measure by the Fed, but maybe potentially a rate increase. If a rate increase goes on the board, the markets will throw up their arms in dismay. But there's a lot of ground to cover before something like that would occur. So don't think it's going to just happen instantaneously at the flick of a light switch. It won't. But it's something that you should consider looking out for. If we see this probability going down and down and down, this one going down and this one coming up, which is a rate increase, it'll only be 25 basis points. But if we see something like that, keep your eye open for it. And this is what professionals do. Professionals just don't go with the river of the mass media. They go on their own path. That's why they're pros. In past halving cycles, we generally saw a lot of upward price momentum around this period of time. We've seen a downward price momentum because of tariffs, because of DeepSeek, because of so many things. But mainly just because of fear. People have been very afraid because it's supposed to go this way and it's going this way. What the heck has happened? Economics 101 has occurred, unfortunately. There's been a lot of problems with trade, tariffs, and all sorts of things impacting the market. A lot of people think that Bitcoin is its own chart. It just moves independently of everything else. Otherwise, why would it be decentralized? And why would it be digital gold? All of those kind of things. Please do not think about Bitcoin in that manner. Bitcoin is a very good predictor of the stock market. It wasn't always, but it certainly is now. You can get the free watch list of all of the different rows from CTKSmethod.org. When we look at row 1, which is the VIX, the DXY, dollar yen, the 10 and the 2, and oil, we see that all of those are going positive. This places negative price momentum into the markets. Not only the stock market, as we saw because we saw the heat map, also the crypto market. The thing is, the crypto market has gone flat and slightly up at the current time. So that's saying something good about the main markets. I'll get to that a little bit later. With row 2, which is risk as well. When these go red and row 1 goes green, it's a confirmation signal. So row 2 is about junk bonds, the euro dollar, the Aussie dollar, gold and silver, and also copper. Copper has been just blowing it away recently. Row 3 are the major indices. We can see from row 1 very, very positive, row 3 negative. This is the way it goes. This is why it's really important to understand your cheat sheet. Here, we're just looking at a figure. We're not even going into the chart. So we can't assess structure, we can't assess direction, momentum. There's a lot of things we can't assess. But when you get really good, you'll be able to look at this and understand what's going on with the market and make some predictions on the next 24 hours. Row 3 references. These are the futures across a variety of different global indices. They all went red. A lot of people will look at Friday's session in the US and say, ay caramba, I think things are going to sell down until the US opens, especially throughout the Asian session. That is likely, unless we get a bit of a recovery bounce, but we'll look into what to look for those things. In row 4, we're looking at specific stocks: Apple, Tesla, Microsoft, Nvidia, and MicroStrategy. We saw a little bit of green, but it wasn't much, but we did see quite a lot of red, and it was pretty brutal. Row 5 is the crypto market. Now, what is this telling us? This is telling us a story. The most risk-on asset class or risk-off asset class is absolutely unequivocally crypto, and we're seeing some green in here. This means that the futures should pick up, and the stock markets in the Asian session and then going into the European session before the US session could have a technical bounce up. So it's very important to be able to do a helicopter view of this and do that analysis. What are we seeing in the row 5 references? This is market cap of USTT dominance, Tether dominance. It's going red. What does this mean? money is flowing out of stables into the crypto market. Pretty interesting. That supports upward price momentum in the futures of the stock market as well. Total 2, Total 3, and others, all giving a bit of a picture as we're getting some degree of recovery in more like the major cryptos, not so much the minor ones. In row 6, we're going deeper under the hood of the crypto market. Litecoin, Bitcoin Cash, Ethereum Classic, and Binance Coin. Binance Coin did extremely well. It just exploded upwards and then it's retraced. It realistically depends on which 24-hour period that you look at. So just bear this in mind when you're assessing these kind of statistics. Row 7 is going deeper again. ADA is down, Solana is up, Doge is down just by a little bit, and XRP nearly flatlining. The memes have been a little bit negative except for Floki. Good on you, Floki. And when we look at row 1, these are very, very important. These are the VIX futures or the fear futures. The fear futures, and don't forget, they don't start trading until the markets kind of wake up, the futures market that is. So we can see right in here, there's a thought from Friday's session that fear would continue on Monday. But the crypto market is saying, hey, not so fast. We're feeling a little bit more optimistic. There's too much fear inside the market. It's time for some optimism. One thing to keep in mind, Bitcoin tends to sniff out risk-off or risk-on behavior. And we've seen the futures. We know the futures are not trading just at the current time. But Bitcoin trades 24/7 by 365. It's a very good indicator of risk-on or risk-off across the entire global marketplace. So it's important to look at Bitcoin. Please do not ignore it. Even if you look at it and you think, Bitcoin is for whatever, it is a very good risk-on or risk-off indicator, and it always has been. It's just that people take a little bit of time to get onto and understand new things. Typically, the biggest mistake that people make, they just rush into their money chart, what they're putting money into, whatever that chart is. And they just look at it and they try to do technical analysis on that chart, never comprehending that that chart is moved by other charts. For example, Bitcoin moves all of the alts. So when we look at row 1 and we look at the VIX, when the VIX spikes up, look at what happened to Bitcoin. It basically spiked down from 106 to 93. That is quite substantial, but as it retraced, Bitcoin went for it. Now, these kind of inverted relationships can be really difficult to see unless you're a statistician or a mathematician. And what we're seeking to look at is the directional bias or directional momentum. For example, how is Bitcoin moving up and down? Now, that is an inverted chart. If I was to uninvert it, you can see that big push up in the VIX has brought Bitcoin down. That is what is bringing Bitcoin down at the current time. The VIX, fear inside the markets. Therefore, we need to keep our eyes on this positive momentum. It is quite positive. Could it just drop back off a cliff? Perhaps. But when we look at the VIX futures, they're gaining in momentum. So let's just zoom out a little bit. Okay, we've got a bit of a cut over here. We've got the potential for the VIX to keep on spiking somewhat in the coming session or sessions. And this is not a problem. If you know how to deal with volatility, this is actually a huge advantage. We can also see the 2-year yield is spiking up. When yields spike up, everything becomes more expensive from a debt servicing perspective and more expensive to fund savings deposits on the bank's account. So when you see stuff like this, that literally puts negative pressure and puts fear into the market as well. Financial markets exist in a very intricate balance. There's so much intercorrelation and interconnection, and we've seen recently that the yield curve has been increasing in terms of percent and not decreasing as President Trump wants. Looking at row 2, which gives us an understanding of an uninverted relationship between Bitcoin and therefore your beloved altcoins and the major markets and also Forex. We've seen Bitcoin come down primarily because the VIX is coming up at the current time. And we've also can do a confirmation on the DXY strength. You can see the Aussie dollar is currently on the way down. And that's not good because it means the DXY is strengthening, yields are strengthening, and there's going to be more stress inside the markets. These things can be short-lived, but at least you should understand what you're looking at. When we look at the Russell 2000, the index future there, we can see that's starting to bottom out. Now, what is very important, and if you're in the service, make sure that you look at the levels to seek to understand if the Russell has structural support around these areas. The interesting thing, a lot of people think that gold and silver just ignore anything that happens to Bitcoin, but the truth is that they kind of move together, and you can see that very, very clearly. We do have a shining light, which is copper. Copper is saying to everybody, hey, don't get so stressed out, man. I think things are going to get much better. And if we look at the Forex pairs, and especially the DXY, which is this green one, if this starts to roll over, that is fantastic. But it's not kind of looking like that at the moment, unless we see some major repair in the euro dollar and major repair in the Aussie dollar. The markets are uncertain at this juncture in time. Please keep your eyes on the futures because that is the way that you can see the VIX in real time. That is the index futures of the major stock market indices. To trade and invest professionally, you need to get comfortable with uncertainty. Uncertainty is just by nature what financial markets are about. You have the certainty of understanding how to stack probabilities, how to interpret structure, how to interpret cross correlation and intercorrelation, which is very important. If you can look through the charts and you can understand the relationships, if you understand how to predict tops and bottoms in all of these cheat sheet components, you will definitely lose far less to begin with and then start to be consistently profitable. Focus on minimizing your losses first. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.